US. And in keeping with US, we have our first proper US speaker waiting in the wings, Bo Yoder, good old friend of mine. I've known Bo for many, many years, and delighted that he's here to give us an update on the markets. So let's bring him into the webinar and see if we can connect. Okay. Okay.
Hey,
So,
can you hear me okay?
hey, Bo. Can. Thank you very much. How are you?
I'm very well, thanks. Yourself?
Oh, we're great. We're great. We've had quite a few webinars here today, and we have a busy time with a live event coming up next, well, a week on Saturday in London. I wish you could come
Oh,
over,
super.
but
Oh, maybe the
so
next one. That would be fun.
maybe
Haven't been
next
in a
time
while.
for sure. How are things going for you? Busy with the markets?
Oh yes, always, always. Yeah, especially given our political climate, we're in a very knee-jerk environment, which I'll be talking a little bit about here today. And basically, I guess we need to update the headline. Uh, the goal here was to talk a little bit about market themes, where we are in the U.S. You know, what kind of market environment we could see in the future. So. What I'd really like to do
Yes.
is kind of open a little bit more of a dialogue rather than do a structured presentation. When you give me presenter, I'm going to just show you some charts and we can kind of go from there. So for those of you
Okay. Let's do
who
that now.
are connected, welcome, and you'll see that little question box up in the top corner of your screen. So use that, and I'll either see your questions or if Simon, if you see somebody asking a question, just go ahead and shout that out. So.
I would. Thank you.
Yeah. All right. So let's see where to begin. Well, first of all, for those of you who don't know who I am, I guess I'll do a quick intro. I've been an active trader for 20 years now. Started out in the late 90s, and I've pretty much traded everything that moves. I primarily focus now on futures and forex, and that's mostly because there's a strong tax advantage for U.S. citizens to trade those instruments. But I know a lot of you don't have those restrictions, so we'll talk a little bit about some stocks. But I kind of wanted to open this up, especially if we're going to have a chance to be together once a month, and kind of open the dialogue and get a little bit of a loop going. So to start out, I'll talk a little bit about market seasons, and really what I want from you again is just interaction. You know, help me understand how best to serve you, and I can make guesses about that. But if you actually respond and ask questions, it'll guide me more in that direction. Because again, I don't have a PowerPoint. I'm not doing anything structured here, so this will be a fun little back and forth. And then I guess Simon, the only thing I need from you is just give me like a 10-minute warning because I could go all day, so I don't want to overrun my time. So
No
help
problem.
me know when to wrap things up.
No problem.
Okay, so
What are we looking
yeah,
at?
to
We're
get
looking at
started.
the S&P.
We are. So normally when I start thinking about the markets, and obviously I'm a US-based trader. I live in Portland, Maine, so I'm about, what is that? Couple hundred miles north of Boston, for those of you who don't have your geography, the land of vacations and lobster. It's a great place to be. So I'm in the East Coast time. I really do, trade around the New York trading times. So the equity markets are kind of my home base, and the S&P is really the benchmark that I look at to see what the overall tone and trend in the market is. So there are a couple basics that I need to kind of wade through so that what I say makes sense, and hopefully I'll give you some aha moments as we have some time here together. We don't have several hours, so I'm going to try to put as much as I can together. The last time I think I was trying to put too much in. People were saying I talked too fast, so I'll try to slow it down a little bit and get some time for questions as well. So the first thing you need to understand philosophically is I treat money in the markets very much the way that a farmer would treat the agricultural business. I really think of myself as a money farmer. So once you understand that metaphor, it really changes your perspective on things. I believe that the markets are very deeply cyclical and that markets have different seasons. So right now, if you can look at this as the daily chart of the SPY, and this is a proxy that actually trades like a stock. It's an exchange-traded fund. I'm sure all of you are familiar with that. So if the market, the S&P goes up 10%, this stock proxy will go up about 10% as well. So they track very, very closely. And at the bottom of your screen, just a couple of simple indicators. I've got stochastics and RSI. So this is essentially a momentum indicator, and then the yellow line is a little bit of a cycle indicator. And these things just measure relatively to where the market is. Oh shoot, this gets in the way. To where it's been in the past. So it gives you a little bit of a clear and objective way to see the markets, and I'll take RSI off. That's more of an intraday tool anyway. And see where they're going and see what the strength and energy and power, passion, whatever you'd like to use in this market is. So first glance, what do we see? Well, we've obviously had a bull run. Pretty substantial bull run in the market. This orange line is the 50-period moving average. That's kind of a trend delineator for me. So you can see that that's sloping upward. We're in an uptrend. But it doesn't take a rocket scientist to see that. We had a big push up, then a bit of consolidation, and then a push up again. Now, I talked a little bit earlier about how the markets are deeply cyclical. I think of these markets almost like a series of pendulums. So think of the pendulum in a clock, right? It goes back and forth slowly, ponderously, and consistently. You can speed that pendulum up by shortening the length of the arm, and you can slow it down by lengthening that arm. Very same thing in the markets. The pendulum that drives, say, a 10-minute chart or an hour chart is much, much faster. It cycles a lot more quickly than the daily. The weekly cycles more slowly than daily, and the monthly even slower than that. So that's kind of the construct that I'm using to look at the market. And we're going to look at the market in 3 dimensions. As you probably know, I'm the head trader and one of the founding partners of RBJ Financial Group, and the methodology that we use is something that we call the 3D Apex probability analysis layer, and 3D is our approach. We're looking at multiple time frames. We're looking at how these different cycles are interacting with one another. The next thing that's really important for you to understand is just simply the math of odds stacking. Okay, odds are everything in the market. It's a little bit like being an insurance company. If you think about it here for a moment, you probably have heard of the actuarial tables. Those are a series of statistical studies that put out the probability of somebody having one of these conditions. So in terms of life insurance, somebody dying and you need to pay off on that policy. And by understanding what the odds for someone dying within the parameters of your insurance policy, you can create a model and figure out what your break-even is and what your profitability is. What's really interesting about odds is they're math. They don't go anywhere. They're not subjective. That 2 + 2 always equals 4. And the other thing that's fascinating about odds is how they interact with one another. So I want you to think about the most basic odds parameter in the world, flipping a coin, right? There are only 2 outcomes, heads or tails. Everybody knows intuitively this is a 50-50 proposition. So one would be able to very accurately say that that's a gamble, right? There's no particular edge. It's 50-50. So that to me is the definition of a gamble. You're going into something blind, hoping for a good outcome. And guessing and hoping are the 2 things that we want to eliminate if we want trading to be a sustainable, reliable, and repeatable business, or a hobby that makes you consistent money. So if you flip a coin, it's 50-50. What people don't realize is how odds interact. If you were to bet me that I could flip heads twice, all of a sudden now there's a strong advantage or disadvantage depending on what side you are on that bet, because the odds of flipping a coin heads twice drops to 25%. So one flip heads, it's 50, but if you try to do it twice in a row, your odds drop dramatically. What people don't understand clearly, and I want you guys to understand right at the outget, is if I were to flip 2 coins, one in each hand, and our bet was that I could flip heads on at least one of those coins, well, now the odds that I could win that bet are strongly in my favor, and they go to a 75% advantage. Okay, so what we're doing is looking for opportunities that have a bias in our favor, and we're waiting and focusing on these opportunities that have multiple edges in the marketplace, all concurrent, all at the same time in the same place. The odds then stack, and we have a position in where we can have a very high probability chance for success. And that kind of consistency does 2 things. One, it eliminates the sense of gamble and stress associated with trading. Trading suddenly goes from being this battleground where you're toughing it out and fighting and clawing and having all of these stress-inducing experiences to one that's very sort of slow and ponderous, much more like a farmer. You plant your seed, you water it, you tend it. That doesn't mean that there can't be a freak frost which kills your crop. That's what stop loss is for. But on the whole, if you go through the process that it takes to grow a crop successfully, you're going to have consistent results. Sometimes you'll grow, your yield will be really high. You'll end up with more produce than you expected. Sometimes a little less, but you'll be within a zone very consistently. And that's really my hope for all of you. And so now my challenge to you is, as I go through some of these things, a lot of these concepts are a little bit heresy because they go in the face of conventional wisdom, and that's really the challenge that that I have, and Roger Corey, my partner, and Dr. Jared Goldstein, who are the three primary partners at RBJ, is that what we have here is really a game changer. And we've been doing this now for 5 years. We have our stats are too good to be believed. So if you guys can help me work my language so that I'm communicating clearly to you about what it is that we have, I'd love for each and every one of you to be able to have that in your own trading, because it puts you in a place of very serene joy, where really the only stress is boredom, that you have trades that are setting up that aren't fully qualified and don't have the kind of odds that you demand. So for those of you, there's always the proof element out there. I ran my my numbers for the month to date. Let me get this out of the way, and you can see that I trade every day. So in the last, or at least month to date, I've had 11 trades and 9 were winners. So you can see I've had 83% win rate so far this month. But this is more important. Winning is great, and everybody's focused on winners, but I want to challenge you, this is the first heretical statement, to flip that on its head. What if you stop chasing money and you stopped focusing on trades that are likely to win you money and make you profits, and instead you focused on your losers and loss elimination? What if you could instead look for trades that were unlikely to lose you money? Everything shifts and changes perspective. And you can see here that even though I've had a very high win rate, and I'm up over 30% so far this month, which sounds really wonderful, I'm most proud of this statistic here. And here you can see this is the S&P, this is the EFA, which is sort of Europe, Asia, Far East, a large index, and then this is the Vanguard Total World Index. So you can see that compared to these massive indexes, I'm crushing it, right? It's been a very weak time. You can see that these markets are down. They haven't recovered yet from their drawdowns. My biggest drawdown was 1.73%, so very small, very controlled, and it only lasted 3 days before my account equity went to new highs. That's the number I'm proud of. That's the number that I like to shout from the rooftops. Profits will come as a result of process. I know that sounds counterintuitive, and it is, but it's the truth. The other thing I really want you to notice here is, if you look at the distribution of returns, the big peak here for the market indexes is -2 to 0%. I don't know if you can read that. It's pretty small. So the markets have been generally flat to down during the last month, and this is month to date. Look at my returns. They pretty much all fall in the 0 to 2% profit zone, right? So I'm not making giant, crazy profits. My 30% was built, 1.5%, 2.5% at a time. Small, reliable, repeatable, consistent profits. That is the holy grail. That is what allows you to compound an account from a very small amount of money to a very large amount. Obviously, if you can sustain 10, 20, 30% per month returns, you double the account every couple of months. Things happen very, very quickly. And the way that I get to that is really focusing on eliminating losses. Okay, so that's kind of the baseline. Let's go ahead now and go to the charts. So what do we see here? Well, the pendulum swung upwards, and then it needed to correct, so it swung back. Then the pendulum swung upwards again. Now we're in this same kind of corrective mode. We've had a bit of sort of backing and filling. The market has taken some profits, but it hasn't really collapsed. It's just been a very gentle distribution phase. And now we're having another bullish phase here. Now what's really interesting is, if you look at this, just looking at the power and the energy, the passion in the market here, you can see that both price and this momentum indicator, the stochastic indicator, is higher. So that indicates on the daily level that there's an increase in power, and we're likely to challenge these highs. Okay. Now that's very interesting, because as we take a three-dimensional approach to the market, let's look at the same market, but let's look at a 5-day chart, because there are 5 trading days in every week. So this is essentially a weekly chart. Now we see a very different picture. The market is going up, is it not? Right? We're bullish here. We see a big green bar. We're retesting the highs. We're likely to break to a new high. Look at the energy in the market. It's falling off very dramatically. Well, that's a contraindication. Okay, so that tells us that the daily pendulum is still on the upswing, but that the weekly pendulum is pretty significantly pushing to the downside. And if we go to a monthly, which is essentially 20 trading days in a month, so look at a 20-day chart. Oh, shoot, that's going to have to load before I reload. You're going to see that there's also a fair amount of bearish energy as well there. So you can see that as the market rallied, massive rally here, really the energy is kind of equal. There's not a whole lot of advancement there. And so that tells us that we're coming to the end of something. And you can see in our similar rally throughout the 12, 13, 14, 15 rally, you can see how the power came out of the market there. And that really gave us a strong indication that this little upside here was an exhaustive move and likely to produce a sharp downdraft. And think of how valuable that would have been. That's a massive move down that you could have either gone short on and made money, or if you're a longer-term investor, you could have avoided that downdraft and made more money going back to the upside. So bottom line, in the S&P, I think we're going to probably chop here. I think the highs are likely to be assaulted. We're in a very heavily news-driven environment. As you all know, Trump's tax proposal is out there now, and I think you're probably going to see a lot of violent moves up every time there's a news event that seems like the tax proposal is moving forward. You'll probably see some knee-jerk reactions to the downside if it looks like the tax proposal is going to go down. But I want you to spend a minute thinking about how Donald Trump has lived his life. And he utilizes something called the Overton window brilliantly. And without going into a long conceptual piece, it essentially, you make an outrageous claim or statement that nobody believes, but it shifts the debate. And then when you come back to a lesser version of that outrageous statement, it seems reasonable in comparison. So I assume that in his tax proposal, he's done the same thing. He's come out with this outrageous tax proposal. Everybody's freaking out and debating it with high emotional intensity. And then I think he'll back off a little bit, and the actual tax proposal that ends up going to a vote will be much more moderate. It'll still be way more than anybody would have expected at the outset, but they'll be so relieved it's not the outrageous opening bid that they'll feel comfortable, and he'll probably strike a deal. That's been his strategy his entire life. He wrote about that in his books, and I've seen that now consistently from him as he's been president. It drives people nuts. It makes them very emotionally manipulated by it, but that's the strategy, and it works. It's a strategy. Notice and watch, because we've got to deal with him for another couple of years here, and you're not going to see that deviate. So what does that mean to us as traders? Well, it means that we're likely to get a lot of volatility here. We're likely to get a lot of sharp moves up, sharp moves down, as these tax proposals and counter proposals come out in the news. So that's the basic psychological environment, the market season that we're in. Okay, we're in a period of stormy weather. So this is not a very good time to be a multi-day trader, because you're going to have a lot of violent moves up and down. It'd be a great time to be an intraday trader, because those violent up and down moves are likely to be very unsustainable. And if you're able to interact with the market on an intraday basis, the market will get wacky to the upside or wacky to the downside, and you'll be able to interact with that. Now, my analysis that we just went through here, we've got bullishness on the daily. That leads me to believe that we're going to retest the highs and perhaps break to new highs. So in terms of this particular market, we're looking at a price level. Actually, the webinar is obscuring that, so I can't read that, but you guys can. Whatever that price is right there is at 243, 245, somewhere like that. We're likely to come up to that level, maybe a little bit beyond. Very unlikely to have a long and sustained breakout. Because there's a lot of evidence of power coming out of the market, energy coming out of the market in the deeper time frames. Okay, so generally bullish in the short term, generally bearish or flat and choppy in the medium term. And anytime you have two different constituencies, the daily and the weekly, or the weekly and the monthly, in conflict, as we have here in the S&P, those are prime conditions for choppiness. And we love choppiness as active traders, because choppiness creates unsustainable moves that we can then trade against and make consistent profits out of. All right, so any questions on anything that I've talked about up to this point? Anything that I can kind of expand on here, or shall we go on to the next symbol?
Bo, there's no questions at the moment, thank you. So
Okay.
if anybody has any questions, we'll let you know. And
All right. Super.
thanks.
So next, let's go look at gold, and this is again an ETF that tracks the price of gold. So these are just easy to chart, and they track so cleanly that it makes for easy analysis. So now I want you to look at gold here. As gold collapsed down towards the $1,000 per ounce level, and this is early in the year. And I want you to notice, let me go ahead and draw a couple of lines here to really highlight this. If we take this significant swing low here, and we draw a corresponding line to the ultimate low there, okay, we see that's a very powerful move to the downside and a very sharp angle. Notice how much information we got out of the indication from energy. Right here, it's actually dead flat. And if you go from the extreme low that we had in the momentum indicator, we can see that it's actually uptrending a little bit. That disconnect shows that price is moving without a fundamental increase in power. This is not a trend that's sustainable. It's moving towards an unsustainable point, which means that there's a potential entry, in this case, as a long. So now let's take that information and let's look forward. What happened? We rallied, lots and lots of energy. We rallied again, a little bit higher readings there, so that was confirmed. Then we rallied up on very low energy. Nice shorting opportunity. You can see the market pushed lower. Then we pushed back up, and even though price didn't go to a new high, we see that energy and momentum did, and that told us that this little correction here was very much a viable correction for a breakout. And once that breakout occurred, notice how energy didn't confirm. It was actually lower, slightly lower, even though price was higher. How cool is that, right? You can literally see the pendulum swinging, and you can see if there's somebody giving it a push to nudge it into another cycle, or whether that cycle is coming to an end. So now that energy is coming out of this market, we'd be thinking a bit bearishly about this market. So let's go ahead and confirm that by looking at the 5-day and see what the weekly energy looks like. Okay, plenty of energy there. Notice how this energy reading is actually a little bit higher than the previous one, but yet price is significantly lower. That's telling us that there's another bit of energy moving higher. Okay, that's going to generally promote a retest of the $130 level, which roughly correlates to $1,300 per ounce in gold. And then let's go take that three-dimensional approach and look at the 20-day. Again, this is the proxy for the weekly. And you can see there's still plenty of energy, but boy, we've lost a lot here on this little correction. So that kind of disconnect, where you have some bearishness, some bullishness, and some bearishness, again, prime conditions for choppiness. So let's go back to the daily and see what we see here. We're likely to come back up and at least retest these highs. If we do, it's extremely likely that the momentum reading at that point will be sharply lower, and that would be a double top that would be quite interesting as a short-term cyclical short back down towards these areas. In terms of a longer-term trend, I want you to notice over here, and this is really where the probability analysis layer shines, because we have a traditional trade here, traditional pattern in the form of a head and shoulders, don't we? There's your shoulder, there's your head coming down, and there's your shoulder. So there are a lot of traditional traders who are focused now on this market to the short side, expecting a retest of these lows and then a break below that level. But given the readings that we've just seen, where we have bullishness on the 5-day, which is essentially the weekly, and the 20-day, which is essentially the monthly, what does that tell us? It tells us that this is probably a sucker bet. This is a trade that is likely to struggle and fail. So those are really the two tenets in our methodology which allow us to produce superior results, which is we have a process to eliminate randomness in our trading, so that we're not guessing and hoping, we're not flailing around blindly. We know what the odds are at any given point, and we can wait patiently for those odds to become very compelling, thus producing a consistent 80 to 90% win rate. But more importantly, this information allows us to identify which trades are likely to frustrate us and cost us money before we enter that trade and get stuck. Okay, so there are a lot of people who I believe are probably going to get stuck in gold to the short side here, whereas now you have some pretty clear information that at minimum this is going to be a miserable short, but this could actually become a short squeeze and push back up to these highs. So isn't that cool? Again, there's a great quote I should have it committed to memory at this point, but essentially it states that anytime you think that there's chaos and randomness, it's just simply a pattern that you have not yet discovered or lack the tools to identify and measure. And that's what I really want to share with you, that these tools exist. Obviously, I don't have enough time with the time that we have together today to teach you the whole methodology, but obviously at the end I'll give you a chance to join us and learn all these things step by step. Okay, so there's gold. Let me go down to the next. Let's actually go look at an individual stock here. And this is the stock of Walmart. Let's go ahead and start at the 1 day so we can see what the daily's doing. Now, a lot of people really see momentum in the market and chase it. Okay, so they see the market up here. Walmart's obviously had a great run, and they think, well, gee, that energy's there. I should buy it. It's probably going to continue. Well, let's take an evidence-based approach. What do we see? Let's go back and grab our tool here. Get a line tool. If we go back to this significant swing high, obviously it doesn't take a rocket scientist. Big move up. If we look at this more intermediate high, again, very similar slope. But what do we see in our momentum indicator? We see a slight downturn. That's the first hint that all's not well. This is probably an unsustainable move, and it may be coming to the end of something. But one analysis methodology in one time frame is not enough to get the kind of odds stacking that we demand. So let's look at the 5 day, and let's see what we see there. A little bit of a different piece of information, isn't it? Here we have, let me draw the lines. Energy and power is growing along with price. Price and energy momentum are in synchronicity. That is a very positive thing. Would you not agree that this is a double top? Yes, go ahead.
I think I'll probably come in here because a few questions started to come in. Salvan, can you explain the blue and red lines along the bottom, what these indicators are?
Yeah, this is a stochastics indicator, and stochastics basically, and I may butcher this, but you can find the definition anywhere. It essentially measures the price relative to recent ranges. So it gives you a sense for the acceleration in the market. It gives you a sense for the consistent growth or in price, or the negative, the bearish movement in price. And by measuring this, so this goes back to something I've talked about, I think, before in these sessions, which is a lot of people in the trading world act like an astrologer. All right, the astrologer looks at when you were born, it looks at where the stars were, and makes generalized statements about what could happen in the future. Right? It's not very scientific. Sometimes they're right, sometimes they're wrong. It's a bit entertaining, but it's not something you'd want to bet your livelihood on. Okay, what we do is very much that of the work of an astronomer. Okay, what does an astronomer do? They take a tool, a telescope. They look at a body. They look at a group of people within a certain area. Let's say they're looking at a planet, and they are going to take a measurement based on what that planet is doing, and then they're going to take a few hours off, and they're going to go back and look at that planet again, using, again, an objective tool that's scientifically based. They'll change the angles, and they'll look at the difference between those two measurements, and through a mathematical process, they will then be able to come up with a real observational-based mathematical equation for how big that planet is, how fast it's moving, and they can actually predict where that planet will be a year from now, and it seems like magic. That's another great quote, actually. Any technology sufficiently advanced is indistinguishable from magic. So these things that seem, magical and all, it's really not that difficult to understand once you understand the science behind it. So, yeah, another question?
Very good. Yes. Thank you for that explanation. Richard is saying, why is gold predicted to be long when silver is hitting new daily lows and looking short?
Well, that's interesting. The short answer would be because the supply-demand forces are different. But that would be a sort of a snide and disrespectful answer. So let's go use our instruments and get an objective view on that. So SLV is the proxy for silver, and let's actually just go ahead and look at that. Okay, so what do we see here? Well, actually, let's go to the 1 day. We always want to start with the most granular observations. And let me go ahead and clear out all of my drawing tools so that we don't have any confusion there.
We just have a couple
Okay.
of minutes left, though, I'm afraid, so we'll need to go quickly if we can, just to.
Okay. All right. I'll do this one quick, and then I'll let you know where you can learn more if you'd like to follow up on this or contact me directly, and then we'll look forward to seeing you next month. Okay. So silver daily, quick look. Two highs, double top, right? Classic reversal pattern. It's caused a reaction to the downside. We can confirm that that was actually a tradable opportunity. Look at the sharp reduction in energy that was in that market as it broke out to a new high. That was a confirmed double top on this time frame. If we go to the 5-day, again, I'll go fast here in the interests of time. Head and shoulders. There's a shoulder. There's a head. There's another shoulder. So if we take a look at the shoulder to the head, we can see that the energy was growing there. Then the energy just fell off a cliff. Massive fall. Then a little bit of a whipsaw back up, but you notice that the energy there was below the head, so we have confirmation. And then we even got a sweetener here. When it came back up and made this little double top, within the context of a head and shoulders, that double top had confirmation in that the energy there was significantly lower. That's odds stacking. That was a high probability setup. Okay, so so gold is a little bit waffly, and let's just go one last so we have true information. On the 20-day, we see there's an area of resistance in the form of the 50-period moving average. Power is falling off a cliff. So I would say yes, that was a high probability short in silver. According to our methodology, we would have been short on that double top, and we'd be into some nice profit right now. If we had that position open in our portfolio, we would be expecting a retest of the lows here. And probably the first area that you're gonna see some trouble would be around $16 a share for silver. You start to see some struggle, and that would be a great place to maybe take some profits and lock in some of those gains. So hopefully that answers the question. Any other questions, or shall I move forward?
Just one last question. Again, Richard, referring to the stochastic indicator at the bottom. Which stochastic? Is it 14.3.3?
It's a standard stochastic. The settings are tweaked a little bit. You can use the standard settings and get much the same information if you'd like. If you want all the details, then I would refer you actually to a training that my partner Roger Corey, who's the creator and developer of the 3D Apex probability analysis layer, did that we have made available to you guys. So that is available at theoddsrule.com. Let me go ahead and open that up. Show you that. So it's the odds. Oops, let's see. That's our training area. Theoddsrule.com, and that's going to take you to the registration for a webinar series that we do. Again, our goal is to eliminate randomness, and Roger talks about the 5 different odds shifting steps that it takes to get there. So it's kind of what we talked about here. It's all the same core principles, but a little more verbose, a little more expanded. And you can get more information there. And actually, this is a little bit of an experiment. And again, feedback, please, if you want to connect up with me, Bo, my name, B-O, at rbjfinancialgroup.com. I'd love to hear from you. Again, we've got something here that really is the best that I've ever come across in 20 years. If you work it, it will work for you. It is the end game for trading. You're no longer forced to chase a new thing, find a new strategy. I literally, for the last 5 years, have traded double tops, double bottoms, inverse head and shoulders, very consistent. Again, 80 to 90% win rate. I know it seems too good to be true. Anything you can help, because I know you're all cynical and skeptical about promises that people make. Please let me know.
People, of course.
Oh yeah, I'd be happy to answer them. You know, again, we've done all kinds of stunts to prove this for people. You know, I did a live trading day. I had 100 winning trades in a row, no losers. You know, this month again, what am I, 80+%? You know, it works. Period. So the cool thing about this, if you go through the this webinar, you'll see in the training a lot about the 5-step process, but also there's a little bit of an experiment that Roger and I are running here. We've never sold any of this information for less than $5,000. We've been very focused on working with people who are at a higher level and more capitalized. Really almost more like a franchise. You're buying into a business. We're trying to bring that down to the average trader and even the hobby trader. So if you go through this process, we're actually going to give you that training, which is multi-$1,000 training, if you'll commit to mentoring. because we've really discovered in the last 5 years, as we've taught people, that our information is extremely valuable, it's extremely good, it works, but the follow-through, our ability to affect change in other people and other people's trading results is really about connecting them with them live in situations like this, where they can ask questions, show us their trades, we can critique what they're doing. So that's a little bit of an experiment we're running. It'll be up for a limited time, so jump on there, theoddsrule.com. We'd love to have you join us, and we'll teach you how to do this for yourself.
Box there, so people should go ahead and sign up. Fantastic.
Yeah.
Bill, we're out of time, I'm afraid, already, but thank you very much indeed, and thank you for almost stepping in at the start when I didn't think.
Always glad to. Like I say, if I've got charts. Oh yeah, if I got charts, I can go at it. So hopefully these forecasts have been useful for you guys, and we'll connect back up on them if we see you here the next time. So
definitely.
Appreciate your time. Thanks, Simon, as always, for the opportunity. Catch you soon, and take care, everybody.